Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today. This is a show where we will help you understand all the closing action of the stock markets. Also to tell you how the day really panned out. Of course, the big RBI policy out of the way, 25 basis points hike has come about. And the markets are in fact cheering the announcements right there. We have seen the markets have inched up towards the high point of the day now as we inch towards the closing. 1% uptick for the Nifty 50. It's trading at 17,891, up by 170 odd points. Look at the Sensex as well. 475 points of an uptick is what you can spot right now, and the levels are 60,758. In fact, it's a broad-based buying that you're actually able to spot looking at the broader markets. The mid and the small caps also participating in the move on the upside. We have seen that the mid cap and the small cap 100 indices both are actually moving in tandem and in line with the benchmark indices. 1% uptick almost for the mid caps, and the small caps higher by about 0.8%. And the India VIX levels are slightly lower, 3.7% of a dip right there, 13.5 as the current level. In terms of the sectors, all the sectors of the Nifty have actually moved into the green zone, with rallying, some of the sectors that are actually leading the rally, including the metals pack, for example, a very sharp bounce on the top. 3.7% of an uptick is what you'll be able to spot, almost a 2% jump for the ITs pack as well. And apart from this, you're also seeing some participation coming in from the financial services pack, PSU banks, and also gains coming in on the pharma pack as well. That has in fact moved up to the high point of the day too. The Nifty Pharma at over 1% gains right now. Even the realty and the auto spaces that were sulking for most part of the day, especially after the RBI move as well, we are seeing slight recovery on that front as well. In fact, both these indices have also inched up into the green, about 0.3% higher for these as well. But when you talk about the markets, definitely the market breadth favoring the bulls at this point in time. The gainers include some of those Adani stocks that are moving higher for the second day running. Adani Enterprises up by 15% odd, Adani Ports up by 8%, HDFC Life, SBI Life, JSW Steel, Bajaj Finance, some of the top gainers on the Nifty pack. On the losing side, you do have slight losses coming in on the two-wheeler majors like Hero Moto, Eicher Motors. L&T is also declining by 1.3% odd. Bharti Airtel, ONGC, some of the drags at this point in time when we talk about the top Nifty 50 losers. But time now to welcome our guest for the day. Mr. Nipun Mehta joins in. He's a market expert. Welcome, Mr. Mehta, and good afternoon to you. Thank you so much for taking the time out for this discussion on Business Today TV. Well, big day. The markets are cheering away. What are the factors that you believe are really pulling up the markets higher? Is it the RBI announcements that have come in, mostly in line with the expectations, barring the stance? But are there, or do you think there are other factors as well?
Good afternoon, Sakshi, and thanks for having me on the show. I think if you look back for about a week, about three major events went by for which the markets was waiting fairly nervously. So I would say the finance budget, the Fed meet that was there earlier in the week, and of course the RBI policy today. With all of these three going out of the way and the results season probably almost over with some of the results left now, clearly the market and to an extent you can say the Adani uncertainty reducing in terms of the price volatility that was there. I would think markets have looked at that positively, particularly whatever was mentioned by the RBI governor today in the earlier in the day in the policy. So I think with reduced uncertainty, there's reduced nervousness that you're seeing, and that's what's showing up in stock prices today.
Absolutely. But, just like how you pointed out, the two biggest triggers that we were awaiting are now behind us, the budget and the RBI policy. So what's next for the markets with the earnings also largely behind us now? What next can really pull this, level for the markets higher from here on, and what can lead the rally further from here on? So far in 2023, we've seen a rather sideways momentum in the markets. But can we see that, most of these big triggers behind us, can the markets really look at an upside from here too?
So I think once a lot of these major events are out of the way, markets would tend to look at the other uncertainties that are there, whether they are geopolitical uncertainties that are there, and or any specific announcements that are made by various governments or the central banks. I think what you will generally tend to see is that companies which have come out with reasonably good results and good management commentary will in all likelihood continue to perform over the next few months, while the companies where the management commentary has not been so positive are likely to be lagging behind. So you will probably see selective price movements happening. The index could be range bound, but selective price movements in terms of specific stocks and specific sectors is where you're likely
Okay.
to see movement over the next month or couple of months.
Okay, so which are the top 2 or 3 themes or the sectors that you're looking at positively going forward from here that may see higher momentum?
So the clear beneficiaries of the budget, which is the infrastructure spend, which is the railways industry, where you're seeing a fair amount of fairly large outlay that was announced, and which is actually multiplied over the last few years or so. These are sectors where you're likely to see increased traction, because you'll see companies getting more projects, announcing more projects, announcing more orders. Clearly, there would be greater visibility in terms of revenues for a lot of these companies. Profitability, obviously, very clearly. So you're likely to see more movement in some of these kind of companies, IT companies, we've seen a few of them announcing fairly large order wins in over the last few days. I think that's where you could see traction. So clearly there will be industry pockets which both result based as well as announcement based, which are likely to see further traction. I think what's also partly important is the kind of valuation differential that continues between the global markets and the Indian markets. Is that something that can over time reduce? That's something that can help support a lot of FI flows reversing or returning to the Indian markets. So I think there will be some of those factors which will be critical as far as market movement is concerned.
Okay, understood as well. But what did you make of the earnings that have come about so far? Any particular sectors from the earnings perspective that you thought that are actually showing some kind of green shoots, and those sectors could be promising going forward too?
So I would say, to a degree, a lot of the sector announcements or sector results have been, to a degree, patchy. So if you take IT, for example, there have been a lot of results that have come out. There have been some which have been somewhat uncertain, below expectations. Look at cement, just as an example. Ambuja came out with excellent results, while some of the other biggies like Shree Cement today didn't come out with the best of results. There have been foreign profitable. So its results to that extent have been patchy. The same goes for pharma. Of course, the one sector that has stood out very clearly is banking and finance. And that's something that has clearly shown up. All the cleaning up that's happened over the last few years, this is clearly showing up in terms of profitability, in terms of lower NPAs, higher margins. I think one needs to be selective, even within specific sectors which are likely to show traction in terms of companies where there is far clearer visibility of revenue growth over the next few years.
Correct, correct. Staying with the earnings only, let's shift focus to the Adani group of stocks. I mean, we all know the way the developments have taken place and the kind of free fall that we've seen in the Adani group of stocks over the last 7-8 sessions. But from yesterday, some of the sentiments started to change as some of those stocks who had been on lower circuits started to hit upper circuits. Some companies from the group started to report some solid earnings as well. Look at an Adani Green Energy. The Q3 results really say that the net profit zoomed over 100% and 103 crores. Similarly, for the transmission, company from the group, that also reported a 73% jump. You did mention about Ambuja Cement's Q3 earnings as well, where the net profit rose by 46 odd percent. So some of these group companies have actually reported quite solid numbers. Is that the reason why the sentiment has changed somewhat, or are there larger perhaps calming of the nerves coming in when we talk about the global brokerage reports talking about how the concerns may not be as large? Some of the banking system also really talking about that the exposure is not as large and as limited as even the RBI governor really pointed out. Is the dust finally settling down, is my question to you. Is the dust finally settling down on the Adani group of developments, and is it the right time for investors to really look as a fresh opportunity to get into some of these stocks that are reporting good results?
So I would think, Sakshi, there are three reasons specifically why stocks have started moving up. The first reason, of course, was when the banks very categorically mentioned that their exposure wasn't too high and they were backed adequately by assets and not necessarily by shares of the promoters. That clearly calmed nerves that was there. The second was repayment of a lot of the debt. Or a part of the debt, I won't say a lot of the debt, but part of the debt that was there. On the one side, repaying personal debt and getting shares that were pledged released. That was a big positive. We've seen announcements of the managements of Adani Ports also indicating that over the next financial year, they would be considerably reducing debt or repaying debt that would be there. And they might reduce a part of the capex as well. So that's the second reason I would think you've seen a calming of nerves. And third, clearly, is the fact that some of these results have come out and some better than expectations, others on expected lines, that the growth in terms of profitability over a period of time is continuing. Margins to a degree are being volatile in certain businesses. But I think clearly there is a growth that one is seeing on as far as the top line is concerned. And the sort of steep valuations that were there were more discounting more of the future earnings. And when there is clearer visibility of earnings, I think that's something that again clearly calms nerves. Is that all that is all of that really enough as far as investors are concerned? I would still think there's stuff that the management needs to do. One, obviously there is the debt repayment and a large overhang that is there as far as debt repayment is concerned. What's being done is only a start. And clearly the second sort of concern that the street has had is the ultimate beneficiary owner that is there as far as the foreign holding or Mauritius holding is concerned. I think clarity on that is something which can further soothe nerves as far as the street is concerned.
Right. So, with the current moves that you're looking at, second day in a row, some of these stocks are showing remarkable moves. Adani Enterprises, in fact, up 18% right now. It's up over 2100 levels. I wanted to understand from you, if you were to choose some of those stocks that still, hold value, even at these, levels, despite the overall debate about where is the fair value for some of these stocks that have run up quite substantially in 2022, where would you be more confident of?
Well, if you look at the shareholding of virtually all Adani companies, except the more recent acquisitions, which is ACC and Ambuja, where there is fairly or relatively wider shareholding, you would have observed, or all of us have observed clearly, that the extent of shareholding as far as retail, HNI, institutions is concerned is very minimal. I'm not sure that's likely to change very soon. You've seen mainly short-term traders taking benefit of this kind of a price movement that is there. Valuations still continue to be reasonably steep or fairly steep. Among the more reasonable valuations, again, none of these stocks are more as an example and not necessarily as a recommendation. But one would typically look at, let's say, in Ambuja or ACC, which has a very long legacy business with clear assets and clear profitability. And of course, there is the Adani Ports business, which has not just which will become in the near future probably one of the largest port businesses in the world. And which has, again, a fairly efficient port business, not just in India, but also expanding globally. So these are some of the businesses which probably are a little more reasonably priced, backed by adequate assets. I think the others probably, to an extent, will continue to be looked at more by short-term traders and not necessarily very long-term investors. Still, there is some of those concerns on debt, on the shareholding, which gets sorted out maybe sooner or later.
Okay, noted that. Let's now shift focus to some of the new age tech stocks that are zooming ahead in today's trade as well. You talk about a Zomato, talk about a Paytm, which is second day running, showing some remarkable moves on the upside, and also into our Nykaa, PB, FinTech kind of stocks as well. Now, Nipun, I wanted to understand from you, what do you make of these kind of moves that we are seeing? Of course, some of the earnings and a part of those earnings are looking as encouraging when we talk about the profitable volatility factor. So some signs emerging right there. Zomato is in fact moving ahead of its earnings. We've seen a CLSA report that says that there's a 42% potential upside. Then, Paytm turning EBITDA net positive ahead of its own expectations, and some of these other stocks also moving higher in trade. 197 now, about 15-16% up, or the day's high level too. So double-digit returns coming in today's trading session. Overall, what is your own sense? How have you read through the kind of moves that we've seen entire 2022 of these stocks, and are things finally changing for some of them at least, if not all?
So I think throughout 2022, after the offers for sale or IPO, depending on which company you're talking about, came around, and the street actually realized that almost none of it is profitability backed, and profitability could be sort of way away, far away. One has seen clearly a huge sell-off as far as virtually across the board, whether it is retail investors, HNIs, institutions, all of them getting a reality check. Of course, it's not that none of this was not known in the offer documents. Virtually all of this was mentioned, but I think it was more of a reality check when a market corrects and there is realization that this kind of a market capitalization not backed by cash profits is something that needs to change. And that's what one saw in 2022. As we saw in results over the last week or so, as an example, let's take the Paytm results that came out, and which indicated not just EBITDA cash positive, but at the net level, over the next few quarters, they could turn profitable. That's something that would have set the street thinking. Of course, a stock like, or a company like Nykaa probably at the net level is already positive, though it's a very small profit. But the street typically starts looking at businesses optimistically the moment there are one or two quarters of sort of outsized profit.